Welcome to my channel. I'm the Covered Call guy, and my goal here is to create $120,000 in annual passive income using Covered Call ETFs. Right now, I yield about $76,000 a year, 6.3K a month, 1.4K a week, and about $200 per day. Legal disclaimer before we start this video. This content is for informational and educational purposes only and should never be considered financial, investment, or tax advice because I am not a licensed financial advisor, investment professional, or tax expert. All opinions expressed are my own and may be inaccurate or incomplete or just flat out wrong. So please always conduct your own due diligence and consult with a qualified licensed professional before making any financial or investment decisions. Remember, I am just some random idiot you found on YouTube and I could be completely wrong. Now, today's video, I created a post on this a while back, not a while back, maybe like 2.5, 3 weeks ago, when 2025 was coming to an end. I should have made this video a lot sooner in the beginning of 2025, but you know what? Here we are, right? So we are going to be looking at all of 2025. We're going to be doing a rundown. We're going to do a 2025 market review of the Covered Call ETF stress test. And we're going to be asking, did your income fund survive the bull run, right? We're going to be looking at NAV integrity, overall total return, and if it matched or beat the index, right? So we're going to be looking at the top winners of 2025 here. All right, so the big test, right? So 2025 was a huge test for income ETFs, right? We saw a super strong bull market. This is usually tough for covered calls because, you know, it trades future gains for cash today. With stock flying high from the AI boom, investors have to choose. Do I want cash now or do I want my account to grow, right? That is the two answers that will lead you to do two different paths. And of course, if you are subscribed to my channel, if you're trying to follow income journey and you're here, you found my channel, I have chose I want cash now. So, you know, did my account get completely blown out by the gains of 2025? So I'm gonna be asking myself that because there are about 150 covered call ETFs. I tried my best to analyze all 150, but I couldn't. So I had to. Well, I couldn't, one, because you would have to pay for these premiums to unlock the information. Some issuers don't just give out information or don't publish it, so you would have to pay for it. So obviously I had to use what was already given out for free, and then I had to narrow it down to assets under management. You know, I had to choose the most well-known, because obviously not everyone is going to be picking, you know, these smaller covered call ETFs, even if they performed quite well. I did have a few, right? Again, I chose the most popular, most well-known, a considered asset under management. And then, of course, NAV integrity was a big one. And did it match or beat the index was my criteria. All right, so finding number one, stocks won. Stocks beat funds. The Nasdaq 100 jumped 21% and the S&P rose 18%. Owning stocks directly beat owning income funds. Did any ETF beat the index? For a full year, my answer was no. The cost of selling options in a fast rising market held them back. So these are the two conclusions that I came to. So if you're disappointed, don't be. We'll talk about it more in deeper details. My finding number two, we do have winners here. The top stars was GPIQ from Goldman Sachs and SPY from NEOS. These two led the pack. They captured almost 94% of the market's return. All right, we're going to do some myth busting here. Haters, okay, there's always going to be someone in the comments say these funds lose value over time. In 2025, they proved them wrong. They paid big dividends and the price went up. Strategy matters, right? Active managers and spread beat the lazy automatic funds. So for those who own GPIQ and SPY, congrats. Give yourself a round of applause. You guys have actually led the pack. These are the two best, I guess, in total, the metric that I use, you know, GPIQ and SPY has pretty much came out on top of all covered call ETFs. So congrats to who owns these two. All right, the grind up market. 2025 was a grind up, right? The worst nightmare for selling options. SP 500 action was a steady, slow rise with no fear. Total return is about 18%. Price gain was about 16.39%. Why does it hurt? Well, in a grind up, the options you sell lose money. That is the trade-off, guys. Of course, we know this as income investors. Funds are forced to buy them back or stop making money. All right, the Nasdaq and the AI boom. Right, the Nasdaq 100 was the heart of the action, driven by big tech and AI chip boom. Because of this, the Nasdaq 100 total return was about 21.24%. Right, this led to FOMO, fear of missing out. People paid extra for calls to chase the rally. This helped funds that bought calls, right, spreads, but hurt funds that sold calls too close to the price. This is why GPIQ and SPY has done so well. They do not sell calls too close to the price. All right, the low fear trap, right? Low fear equal cheap options. When the fear is low, option prices drop. To make a 10% yield, managers must sell calls closer to the stock price, which leads to the trap. Selling close to the price leaves no room for growth. You get the cash, but the share price stays the same. The result, when the market rallies, passive funds miss out early. This punish lazy strategies. All right, so let's talk about type 1 of the active strategy. Funds like GPIQ, GPIX, and Bally. How does it work? These funds own the stock but don't blindly sell options on all of them. Managers decide to sell based on the market. The goal, in a strong market, they sell less so they don't let the winners run. That is why GPIQ, GPIX has been doing so well. It's also why I mentioned I get comments. I'll probably do another video on this. I always get comments. Hey, why do you own GPIQ and GPIX and SPY and QQI? Doesn't it overlap? Yes, there is some overlap, but the one, you don't want to just be buying. I made a video on this too, right? You don't want to be buying all in on one issuer. 2, you want to diversify, and 3 is the different type of diversification. You're buying. Not all covered call ETFs are the same. Each one has their own strategy, right? They either use call spreads, the tactical. They hold the underlying, but they don't write calls on all of them. They do a percentage like GPIQ, GPIX. They do anything from 25% to 75% on writing calls. If not, if the market's hot, they just let the stocks run. That way you get NAV appreciation, right? So of course there's that too. So it's different strategies. This is why it's okay to have some overlap. That is 100% fine in my opinion. You shouldn't mind it. That is some form of diversification. Yes, it's playing the same market fund, the market environment like the S&P 500 and Nasdaq, but it's the strategy. Always buy the strategy behind how your covered call ETF is operating, right? The engine. For those who are new, I always talk about how your ETF is like a car, right? You want to look at the specification. How does the engine perform? What's underneath the hood? All right. Type 2. Call spreads, right? Funds like QQI, SPY. All right, how does it work? They don't just sell a call. They buy one, or they sell one, and then they buy a higher one. The benefit of this is that if the market rocket up, the call they bought kicks in. This lets them catch the big moves. Also, it leads to a tax win. NEOs use special rules, Section 1256, which just means you pay less tax. That's a huge win, of course, right? There's no tax drag. So understand the two different strategies, right? The active strategy and the call spread strategy. That is why I say it's okay to own some overlay. It's the strategy behind these active managers, okay? They execute differently. And then we talk about type 3, right? Daily bits, right? The 0-day time expiration. And these funds are iSpy, TDAC, and T-SPY. How do they work? Selling options that expire today, right? So they are doing daily options. The goal is to catch daily moves without being stuck in a trade for weeks. The risk, there is bad timing. You have less timing. You're doing 9 a.m. to is it 9:30 a.m. to 4 p.m. Eastern time, right? So that's the timing you have. That's what we mean by bad timing. If the market shoots up during the day, you miss out. Losing a little bit every day adds up quick, right? 0.1 to 0.5% or 1% per day adds up quickly, especially when you're doing options trading. All right, the Nasdaq deep dive on GPIQ, it did a total return of almost 20%, right? This is the Goldman Sachs Nasdaq 100 premium income. For those who don't know, the Goldman Sachs GPIQ and GPIX are my two core right now. They are my anchors, right? So they missed the index by only 1.4%. 1.4%. So that led to my analysis that GPIQ was the star. It almost matched the Nasdaq while paying a 9.8% yield. To me, that is absolutely amazing. Okay, I love Goldman's team, extremely smart. They sold fewer calls during the rallies, making it feel like owning the stock directly. So hands down to those who own GPIQ and GPIX. Congrats, you did a very, very smart thing by owning them. All right, let's do a deep dive on QQI, right? They did a total return, of course, matching the Goldman, about 18.6% total return. NEO's Nasdaq 100 High Income Fund ETF missed the index by 2.62%. My analysis that this is still an income beast. It trailed GPIQ slightly, but paid a much bigger yield of 12 to 14%. How did they do this? They use a call spread to let QQI catch big AI moves that would have crushed the other funds. Best for peer cash flow. So congrats to those who own QQI. Again, NEOS has been absolutely dominating. Let's do a deep dive on the Nasdaq deep dive on TDAC. Right. So again, you may say, well, they're new, they don't have a year, and their assets under management is not high. Yes. So my criteria was, again, rising stars, right? Big, well-known, and a growing assets under management, and very popular, and has either matched or beat the index. So this made the list. So to those who own TDAC, congrats, give yourself a round of applause. You did very well. TAP Alpha Innovation 100 Growth, since launch of Q4, it did a total return of about 10.57%, beat the index by 0.4%. Congrats to those who own it. This is starting to definitely be on my watch list here. All right, so this is the only real proof of a strategy beating its index for a set time by resetting bets daily and adjusting for speed. TDAC avoided getting stuck. It caught the daily cash while riding the big jumps up. So those who have gotten to TDAC and those possibly, I don't know, if you're making this a core, congrats, you guys have done amazingly well. All right, S&P 500 leader SPY, right? Did a total return of about 16.7%. This is from NEOS again. SP 500 High Income ETF missed the index by 1.21%. My analysis here that it is still a clear winner. Catching 93% of the S&P 500 return in a strong bull market is rare, very rare. But how did they do it? Again, it is with their call spread, right? They acted as a safety net during rallies. Basically, stock-like returns with a huge yield cushion. Congrats to those who own SPY, who have made it their core. You have done exceptionally well. Give yourself a round of applause here. All right, let's talk about the SP 500 runner-up, right? GPIX. This is from Goldman, right? Goldman Sachs SP 500 Core Premium did a total return of 16.25%. It tracked closely with SPY. GPIX proved the active strategy works by picking their spots. They avoid the losses of passive funds. Performance was almost the same as SPY, practically identical. Just, of course, if you're talking about technicals, it was slightly smaller, right? The small difference is likely just fees. Goldman does beat the NEOS fund in fees. All right, so the others we gotta give a round of applause to those who own iSpy, Bally, and T-Spy. iSpy did a plus 12.8%, right? From ProShares, it is passive, so a warning here: passive daily selling killed the upside, trailed the index by over 5%. Then Bally did a plus 14.3 from BlackRock. Stock pick and hurt it. If you didn't own the top 7 tech stock in 2025, you lost. T-Spy did about 17.2%. From TAP Alpha again, right? Did well, perform in line with the top tier, handled daily resets better than iSpy. So for those who own these three, congrats. You guys did very well of 2025. So give yourself a round of applause here. All right, we're just going to look at the 2025 full year scorecard. Ticker GPIQ. Benchmark was Nasdaq 100. Total return, as you see, plus 19.8. NAV trend is up plus 6.7%. My verdict here is GPIQ is the growth king. QQI for the Nasdaq 100 plus 18.6%, up 4%. My verdict here is an income beast. SPY with the SP 500, total return of plus 16.7%, up 4.5%. My verdict, best overall. GPIX from SP 500, total return of 16.2%, up 6.7%. My verdict here is the runner-up. And then I SPY with the SP 500, return of just, it's the lowest of all, but it did very well of plus 12.8%, up plus 3.2%. My verdict, it lagged, but it still held up quite nicely. All right, and then we're gonna ask, are you traps dead? Right? People say that covered call ETFs eat away at your money in 2025. Every single fund here grew in price, right? Growing up. This shows the funds are getting smarter. Managers are picking better trades. And the holy grail for us income investors, this is the dream. High yield without losing your initial cash. So we're going to have to hopefully see if these continue to perform in 2026. Right? And it got cut off. I don't know why. It did not look cut off. Okay. I probably just zoomed in a little too much. Let's see. Nothing's cut off. Okay, nothing's cut off. It's all right. All right, my final verdict here. Did anyone actually beat the index? I'm gonna say technically no, but the loss was very tiny. Right? GPIQ missed by 1.4%. SPY missed by 1.2%. In exchange, however, you got 9 to 14% yields and less risk, right? So breaking it down here, the best in class is GPIQ and SPY, great stock replacements. And the one to watch right now, I am looking very, very closely, is TDAC. For those who want high risk, high reward, I am starting to look into that now. I will start monitoring it, and I know you guys have been mentioning this in my comment section. It's been on notice. I know you guys mentioned this previously, like a month ago. So don't think I'm just ignoring you guys. A lot of you guys have been mentioning TDAC. However, it is a daily resetter, so that is one I do take caution in. But it is on my watch list now. It is on my radar. It's been on my radar, but it's just I haven't put too much thought into it because of my strategy. I am I like for the strategy to either match Goldman or Neos. I really like how they do the strategy, but thank you for kind of putting TDAC back on my radar, and so I will be watching it very closely. Thanks for watching, guys. Let me know which ETF is in your portfolio. I really want to know, so let me know in the comments. And another question I'm going to ask is, will these 2025 top performers keep the crown in 2026? I really want to know how what you think they're going to be doing and how they can perform in 2026. If we get a slightly bearish market, do you think they will still be holding up well, or another competitor comes out and completely crush these ETFs I mentioned? So thanks for watching, guys. If you're new, please leave a subscribe, a like, and again, I appreciate all comments. Everyone is welcome, and if I don't reply back, I try to, so I will get to you. And if you have another request, let me know what you want to see, what videos you want me to make. Catch you guys in the next, and stay tuned. Thanks for watching.